Nike is currently trading at $107 a share, and in this video I am going to do an in-depth analysis by looking at their income and cash flow statement, the balance sheet, their dividend, and finally use my Excel spreadsheet to see what price you should pay for Nike stock. After that introduction, let's start with their income statement. As you can see, on revenue growth year over year, historically Nike has grown between 5 and 10% over the past 10 years. Except during COVID when they dropped massively, and then the year after they rebounded very nicely. And now it seems that revenue growth has stabilized at around a 4% revenue growth. If you want to see this in the chart, we can see that stable revenue growth, except during COVID, then a nice rebound, and now it seems stable. If we take a look at their net income, we're going to find a very similar story. As you can see, before COVID it was $4 billion, then it dropped to 2.5, it rebounded very nicely, and now it's at $6 billion. So again, like revenue, net income now seems stable. Now let's take a look at their cash flow statement, because we're going to find something a bit different. If we take a look at free cash flow, we can see that it dropped massively during COVID from $4 billion to 1.3, like net income and like revenue, then it rebounded nicely, but then they've had a substantial drop on free cash flow. We can see this also in the chart that they had massive drop in 2020 and in 2022. And let me show you what this was in another page, because I couldn't find it in this one. And the problem was a decrease in inventories. As you can see, in 2020 and 2022, they had a massive decrease in inventories. In 2020, nearly $2 billion, and in 2022, $1.6 billion. So in my opinion, this is a temporary issue. And if we go back to the cash flow statement and take a look at quarterly free cash flow, we can see that it has nicely come back to normal levels. And these inventory issues obviously affect their free cash flow margin, which, as we can see, has historically been around 10%. But then during COVID it dropped massively, in 2022 also, and these are things that we need to consider when doing our assumptions on my Excel spreadsheet on profit margin and free cash flow margin. And before talking about the assumptions, let's quickly take a look at their dividend. As you can see, Nike pays a dividend yield of 1.27%, which is nice, every 3 months. And their payout ratio is less than 50%, 39.9%, which is what I like to look in a safe dividend. Because remember that dividends aren't always safe, and if the dividend eats out a lot of their free cash flow or their earnings, they could eventually cancel it. And now let's talk about the Excel spreadsheet, which tells me at what price you should buy a company based on the assumptions that you put in on revenue growth, profit margin, free cash flow margin, P and price to free cash flow, and then the discount rate, which is the return you want to get each year on your investment. And I am going to do a 7-year analysis on Nike. In terms of revenue growth rate, we have seen that historically Nike has grown between 5 and 10%. And if we take a look at what analysts are expecting for this company, we can also see that they are expecting between 5 and 10% revenue growth rate over the next 5 years. So on my low assumptions, I went with 5%, middle with 7%, and high assumptions 10%. Moving on to profit margin, if we take a look at their history, we can see that their profit margin has been between 9 and 12 or 13%, except some exceptional years like COVID. So this is why on my low assumptions, I went with 9%, middle with 11%, and high with 13%. Then, if we do the same thing with free cash flow margin and look at their history, we can see that it has been a bit lower, but it has been between 8 and 12% consistently, except weird years like COVID. So this is why on my low assumptions, I went with 8%, middle with 10%, and high with 12%. Then, moving on to PE and price to free cash flow, the usual average of the stock market is around 15. However, I think you should pay a premium for Nike because it has such a great moat and is a well-established company. So this is why I went with 16, 18, and 20. And then for the discount rate, because you can get around 9% investing in an ETF, if you take the risk of investing in an individual stock, you should put a higher return. So this is why I went with 10%, 12, and 14%, because as your assumptions get less probable, you should put a higher desired return. And now, to finish, let's reveal the prices. As you can see, according to my Excel spreadsheet, Nike just seems a bit expensive right now. It is currently trading at $107 a share, and according to my high assumptions, you should buy the stock between $84 and $91 a share, and according to my low assumptions, between $45 and $50. So my opinion is that Nike is a great company that I would like to own, but right now it just seems a bit expensive. But as always, you have to do your own research. Also, I want to say that this Excel spreadsheet does not take into account the balance sheet. So let's quickly take a look at the balance sheet. If we take a look at the total valuation of Nike, we can see that it has a market cap of $164 billion and an enterprise value of $165. The difference between these two numbers is essentially the debt of this company. And as you can see, Nike has basically no debt, which is honestly amazing and something that I really like about this company. In conclusion, I am going to wait until Nike falls a bit in price, which if it doesn't, I'm okay with it. I'm just going to try and be patient. It hit $87 on October 3rd, 2022. So that is my conclusion. I hope you enjoyed the analysis. Subscribe if you're new. Let me know what stock you want me to do next, and I'll see you on the next one.